continuous success in all your endeavors. So I'm just sharing my screen. Please let me know if you are able to see my screen actually. So in today's session, what we are going to see about is, as you are aware, right, there were so many changes and updates with respect to the government regulations which has been happening. From the November month, in the month of November, you are aware that there is a major change in the labor has been implemented, and there are many changes have been introduced by the government of India. So there and which another change which is going to be happen and going to be effective from April with respect to is the Income Tax Act. So the current Income Tax Act which we are following is belongs to 1961 and which is 60 years old act. And from this April onwards, the act is have been revisited as 2025. So Income Tax Act 2025 will be effective from 1st April 2026, and we want to give us some highlights to all our clients because this is a right time to make the changes in the system, and you also want to understand what is going to be changed and how it will be impact in our day-to-day transactions. So let's see what is today's agenda. So first we will have an overview of what is Income Tax Act 2025 and what are the structural changes that has been made in this act and how it has been different from the previous act and how it will be easy for us. And the second thing is, so new tax regime. In the 1960 Income Tax Act 1961, there is a two options that we had, right? Old regime and new regime. And how the new tax regime has been expanded in this act. So that we will look into it. And the third one is we will check about the TDS and TCS provisions. So this webinar is mostly given a highlight about the TDS and TCS provisions, how it is going to be handled in the new act and in which section it has been defined and how clarity it has been provided. So these kind of things that we will discuss in today's meeting. And also here we have taken out some important sections and some important items which has to be represented. But there are multiple things has been added in this that we will provide you in a highlight in a newsletter format, something like that, because we cannot cover all the sections and all the exceptional provisions in a 1 hour in a single webinar, right? So those kind of updates will be provided to all our clients in a subsequent months for each and every section what would be there. And the fourth one would be a Q&A session. Finally, we will have a Q&A session. If you have any questions, we can discuss during that session itself. So first, I will give an overview of Income Tax Act 2025. So the act currently which we are following, which is initiated in the 1961, and the act is 60 years old. And after once the act has been implemented, there are many changes which has been happened to each and every clause. So there will be additions and there will be deletions. And when we are referring to the act, right, there are so many ifs and buts would be there. So there are multiple conditions will be there in the Income Tax Act. So this Income Tax Act 2025, the major thing, major expectation out of this act is it should be a simplified way. Earlier act is a little bit complicated. So in this new act, it has been simplified and it has given a very clear-cut thing. This is what it is, the definitions and how the structural change has been happened. So everything will be having a different, it would be easier. For example, we had this 80C, 80D sections and all in the chapter 6A, right, in the old act. But here there is no alphabetical have been mentioned. So everything has been numeric. So if when we are seeing out in the larger view, the number of sections, the numerical wise, it may increase, but when it will be compressed to count of 80 thing, it has been reduced. So these kind of structural changes also have been made in the new act. Just I'm giving a overview of what is there in the 1961 and what is there in the 2025 Act. So in 1961, as per the Income Tax Act 1961, we are having more than 700 sections. But in 2025, it has been reduced to 536 sections. And each and every section has been clearly mentioned what it will explain and how the definitions would be there for the considerations and how it has to be, how in which case it has to be represented. So these kind of clarity have been provided in the new act. And the chapters, in the old act also it's 23, and in the new act also it's 23. The chapters are continuing the same, and the schedules have been have been increased in the 2025 act, because earlier it was 14, now it was 16. But there has been many clarity have been provided in this act, actually, in the new act. So content also, while compared to the previous act, it has been reduced from 823 pages to it has been reduced to 622. And the effective date. So this new act will be effective from the 1st April 2026. So this changes, the proposal of this new income tax act 2025 has been proposed in last February in the budget meeting itself, and it has been passed in the parliament in the August, in 21st August 2025. And it has been mentioned also it would be effective from the 1st April 2026. So here the major change would be earlier, for example, we have represent salary, TDS on salary will be mentioned under the section 192. Now the sections has been changed. In most of the thing, there is a change in the sections, and in certain places the clarity have been provided for the each and every changes. So this is what we are going to look into today's meeting. And next, there was one major confusion, right? In the old act, there is a financial year concept and there is an assessment year. But in the new law, there is only 1 year have been defined, that is a tax year. So there is no financial year concept, there is no assessment year. So here what they have mentioned, defined aspect, I have just bring out the comparison for our easy understanding. So by default, the definition would be tax, it's a 12-month period for earning and reporting the income. So from the start, this duration will be start from April 1st to March 31st. This would be the same in all the cases for the tax year also and the financial year also. But for the assessment year, we will subsequent in the, for example, for FY 25-26, we will do the reporting in FY 20, in the assessment year 26-27. So that would be in the subsequent year, it will be undertaken. So filing period, what would be, filing period would be under the new tax year, the tax is filed after the tax year ends. For example, April 2026 to March 2027, we have to file in the subsequent tax year, that is 2027 to 2028. So there will not be any terminology called financial year and assessment year from the upcoming year. So this will reduce a lot of confusions with respect to the by referring to the notice, whether this belongs to this year or not. There will be some confusions which will happen around, right? So this will come to an end. So they will be mentioned only the tax year. So hereafter there is only 1 year which will be mentioned as a tax year. So there is no other financial year and assessment year will be there. And this is a big move because there may be 2 years have been defined and now it has been reduced to 1. And this gives a more clarity to everyone and for each and every person to undertake this, who are undertaking this activity. And the next one is the due dates. So with respect to the due dates, whatever has been followed under the Income Tax Act 1961, which will be continued for the Income Tax Act 2025. There is no changes in the existing due dates, either with respect to TDS filing or with respect to the income tax filing. So the due dates will be continuous. Then there is no changes in the due dates and the reporting timeline. So the due dates will be continued as earlier it has to be followed. And next one is the new tax regime. So under the Income Tax 1961, new tax regime has been defined under the section of 115 BAC. But in the new act, it has been defined under the section 202. Okay, so what when from the 1st April 2026, section 202 would be effective, and this 115 BAC has been will be effective until 31st March 2026, because from that the sections has been replaced, and as continues by default regime would be new tax regime. If an employee or an individual wants to go for a old regime, then they have to do a opt-out and they have to undertake the necessary reportings and reportings for the old tax regime in the employer itself. So the default option would be continues as it is. There is no change in that. And there is one big change with respect to the eligibility is Section 115 BAC will be applicable only for the individuals and HUF. But Section 202, it's applicable for the expansion. The eligibility has been provided for individuals, HUF, association of persons, a body of individuals, and artificial judicial persons. So the eligibility has been expanded in the new act. Earlier, it is only with respect to individuals and HUF. Now it has been expanded for other type of people who are been reporting. And with respect to the tax rates, tax slab rates, there is no change until there is a change has been announced by the finance bill. If there is a change in the finance bill, that will also make a change. Until now, there is no such information have been provided under the Income Tax Act 2025. So the tax slab rates will be continued up to 12 lakhs. There will not be any taxes will be deducted. So that will be continued as it is. And next one would be a TDS provisions. So in this, we are going from this slide onwards, we are going to see about how the TDS provisions has been changed with compared to the old year. So in old act versus the new act. In TDS on salary income has been defined under the section 192 under the Income Tax Act 1961. But in the new act, it has been defined under the section of 392. And with respect to TDS on other payments, so here the other payments mentioned rent, commission, brokerage, professional fees, technical fees. These are the things that we are mentioning it as a TDS on other payments. In the in Income Tax Act 1961, it has been defined in the section throughout the sections 193 to 194T. There are many number of sections which has been covered in this series. So these sections has been clubbed and it has been come under the single section as 393 in the new act. So in the new act, there will be only one section for the TDS on other payments, 393. Under the 393, there has been scheduled table have been defined. So each and every for each and every type of payment, what is the amount threshold limit, what's the tax rate has been defined under the section 393. And with respect to collection of tax at source, that is a TCS, earlier it has been defined under the section of 206C, but in the new act it has been defined under the section of 394. So while in the old act, no, we have to start from 192 and until TCS it will be comes to 296, 206C. So there will be many sections that we have to refer, but in the new act there are only 3 sections which has to be referred for the TDS and TCS deductions. That is from 392 for salary. For other payments, it is 393. And for the TCS, it is 394. With respect to the TDS on salary income, there is no change have been made. No change have been made in the new act. So what is the practice which we are following earlier that has to be continued in the new act also? So in the start of the year, what we have to get by default, the tax regime would be a new tax regime. We have to, the employee has to declare, submit a declaration to an employer if they want to go for an old regime. So based upon their tax income investment proof declarations, the taxes has to be deducted at the rate of, taxes has to be deducted in the average rate manner. So we have to consider the projections for the whole year, and based upon the tax regime and the investments provided by the employee, the tax liability has to be defined. From that, we have to calculate on the average rate. So average rate of taxes has to be recovered on a every month, that has to be followed. There is no change in the practices of the TDS to be deducted via the salary income. Only the change happened in the sections. So the section earlier it was 192, now it's going to be 393. For example, earlier we have gross salary comes under 17 of 1, 17 of 2, 17 of 3, right? Here, those sections has been changed. Instead of 17 of 1, it will comes under 16. I'm just giving an example. It will comes under the 16 and it will comes under 17, like that for each and every item section. Only there is a change in the section, not in the calculation aspect. And the new and whatever the provisions or exemptions which has been provided under the new under the old act 1961 will be continued to the Income Tax Act 2025 also. So for example, if an employee opted for the old tax regime, they will have an exemption of 1.5 lakhs under Chapter 6A, right? The same will be continued for this year. Only the section would be changed. So all the provisions, all the calculation methodology, everything will be same as per the as per the Act 1961. Until now, there is no change has been provided or suggested in the new Act. So this is what the major observation with respect to the salary income. And with respect to the other payments and or TDS on other payments, the one clarity which has been provided in the new Act is here they have defined the payer also. So who should deduct what? These people has to, for example, if it is a if it is a bank, they have to deduct it at this percentage. If the deductor is not a bank, then they have to deduct it under and tax at this percentage. Like that, the clarity have been provided in the new Act, while compared to the old Act. In the old Act, what would be there? No, by default. Under one, for example, under section 194C, we have to deduct 2% for the um, companies and others. So this would be mentioned. But in the new Act, the structure has been changed as like this. So I will give I have taken some examples. I have considered the acts which will be used repetitively for us, so that it has been mentioned here. The first one is TDS on commission or brokerage. Earlier, in the TDS on commission or brokerage, there are multiple sections that we have. For insurance commission, it will comes under 194D, and for brokerage it will comes under 194H. There will be multiple sections will be applicable for commission or brokerage itself. Now it has been clubbed under the section 393 of 1, and here they have mentioned this table column. This is how the schedule has been defined. There will be a description of the payment, and there will be a payer, and there will be a TDS rate and the threshold limit. So here the payer mentioned means who's paying the money to the vendor. So instead of deduct, earlier we will call it as a deductor, right? In the new Act, they have mentioned it as a payer. So from whom the money is getting paid. So they will be called as a payer. So who is paying the amount and who all will be eligible. Like that, they have given a more clarity on the execution side. For example, if it is an insurance commission with respect to commission or brokerage, if it is an insurance commission, whoever may be the payer, either they may be a company, firm, individual, or a HUF or a AOP, whoever it may be, they have to deduct tax at the rate of 10%, and the threshold limit is 20,000. This will be continued as earlier also. This is the way that we are doing. Now also the same way will be continued. And apart from a commission or brokerage, apart from a insurance commission, if there are any other income that we are paying, there are two different subsections have been provided. Apart from insurance commission, if we are paying any commission or brokerage means if the payer is specified person. Here, the specified person means that individual and HUF will not be included, and in certain cases they will also be added. For example, if an individual having a business or a profession or providing a professional service, if they are doing a business and their turnover is more than 1 crore in the previous tax year, they also have to deduct taxes. And if they are providing a professional service and their yearly income, if it is more than 50 lakhs means, then they also have to deduct tax. So in here, that much of clarity have been provided in the Act. So here the specified person, which will include company, firm, AOP, trust, all the apart from individual and HUF, everyone will be eligible to deduct taxes. If I am an individual and I am having a business income more than a 1 crore and had a turnover of more than 1 crore in the last year means, and then the individual also has to deduct a tax for the insurance, for the commission or brokerage which has been made, if there are any payment with respect to commission or brokerage. So this is what that has been mentioned. So the specified person throughout the TDS and TCS provision would be the same. So wherever I have mentioned specified person, here company, private limited company, partnership firm, everything will comes under to the picture. And individual who is having a business, if their turnover is more than 1 crore and and if they are a freelancer or providing a professional service and having and have a business and have earned more than 50 lakhs in the previous years also has to deduct a taxes. And the next one is TDS on rent. So this TDS on rent in the income tax 1961 for in the previous and the Act 1961, the threshold limit have been mentioned based upon the annual value. But in the new act, it has been mentioned as per the for a month. For example, if I am paying any rent person, if it is for example, here the payer is mentioned as person other than specified person. In that case, if I am an individual, I am paying a rent to a landlord, and my rent is more than 50,000 means I have to deduct the taxes at the rate of 2% for a month. Uh, if it is either for a month or for a part of a month, if I'm paying more than 50,000 as a rent, I have to deduct 2% tax. I have to deduct for that from the landlord and I have to pay it to the government. In case if I'm paying, if the payer is specified person, that means they are company, and they are company means the tax rates would be the same. The 2% for plant or machinery, and 10% for land and building will be continued the same. But the threshold limit it has been changed. Earlier it is for annual value, and now it is for 15,000 per month or for a part of a month. Here the threshold limit has been changed. And the next section would be TDS on interest income. So this has been defined under the section of 393 of 5. So the description of the payment, the first is if there are any income that we are paying interest on security means uh, TDS has to be deducted at 10% and the threshold limit is 10,000. Other than interest on securities, if we are receiving a fixed deposit interest or bond interest or RD interest, something like that, apart from the securities, if the payer is a banking company or a cooperative society or a post office like that, if these people will come under the payer category means then they have to deduct TDS at the rate of 10%, and the threshold limit is 1 lakh for senior citizen and rupees 50,000 for others. So here if the for senior citizen, if it is more than 1 lakh, we will deduct TDS, otherwise they should not deduct a TDS. And the next one is in this section itself, if there are any income interest other than interest on securities. Actually, in the previous section 2 subsection, it has been mentioned, right? The banking company, cooperative society. Apart from these kind of payers, if we are paying any interest, like some companies will have a bond, they will pay a interest to their stakeholders. In that case, they have to deduct TDS and at the rate of 10%, and the threshold limit is 10,000 rupees. So in this TDS also, earlier in the old act, it has been defined under the various sections. For example, interest has been defined under 194A and interest on securities has been defined under 194.3. Now it has been clubbed under the section of 393 of 5. This is how each and every section has been compressed with the type of payments. So, and it also giving a more clarity who has to deduct what and who is going to deduct on what, for whom what percentage is going to be applicable. And the next one is TDS on payment to contractors, fees for professional and technical service. So, with respect to contractors and professional and technical service, earlier we had 194C, 194J. These two sections have been clubbed together and it has been come out under the section of 393 of 6, and they also have provided a detailed clarity of for what type of payment I have to deduct 1% and what type of payment I should not deduct. I should have to deduct 10% actually. So the first subsection would talk about the 194C with reference to the old act. If I'm carrying out in any work with respect to the contract labor, supplying of labor, this will comes under the payment of contract. For that, I have to deduct 1% of tax if for individual and HUF and 2% for others. And the threshold limit also is going to be continued the same. Rupees 30,000 for individual and HUF and rupees 1 lakh for the others. So the threshold limit also it's not going to be changed. Only there is a change in the description, and also they have mentioned payer as any designated person. Here the designated persons will comes under the central government, state government, universities, trust, company, firm, and individual who's having a business, individual or HUF who's having a business and their turnover is more than 1 crore in the previous year. And if they are providing a professional service, and if the business building value, if it is more than 50 lakhs, these persons will be considered as a designated person. If the payer is a designated person, the payer will comes under any one of this category, then they have to deduct taxes appropriately. So, and this 393(6) of subsection 1 will speak about more about the 194C payments, which we have 194C as per the IT Act 1961. And the next one is the same subsection is for carrying out of any work in pursuit of contract, apart if there is a no contract, or by a way of professional service, or by way of commission. So if that is not been an insurance commission or brokerage which has been defined on the earlier section, means apart from that, if you are paying any set of commission and the payer is being an individual or an HUF, then the TDS has to be deducted at the rate of 2%, and here the threshold limit is 50 lakhs rupees. So if the payer is a company, then this section will not be applicable for them. For them, there is another subsection have been introduced. So it will come under the subsection 3. For a company, if I am making a payment to a professional service or a technical service or remuneration or fees or any commission which I am paying to a directors, from the apart from the value amount which has to be considered under the section 392 will be come under this section, come under the 393 of 6 subsection 3. And if there are any royalty payment, and if there are any sum which I am going to make a payment apart from the values which has been mentioned, apart from the payments which has been mentioned in the previous act. So for these kind of payments, and if the payer is a specified person, then they have to deduct 2% for the technical fees, not for professional services. Professional services, it is a 10%, that would be continued the same. And royalty, 2% will be deducted for technical services. Royalty in the nature of for the sale of this, if for a cinematographic and all, there will be a royalty payment will be made, right? So for those kind of payments, 2% will be applicable. And if the payee engaged only in the business of operation of call center, then we have to deduct at the rate of 2%. There will not be 10% taxes. So for these kind of payments, and this class, if the condition has been applied, then we have to deduct 2%. And 10% is applicable for other set of the payments. For other than that, we have to deduct at the rate of 10%. So here the threshold limit is for a fee of a professional service, fee for technical service, remunerations or fees paid to the directors, which will not be considered under the salary income, royalty payment, not royalty payment, any sum referred other payments and all. The threshold limit is 50,000. And for the director remuneration, there is no threshold limit. Even if I am paying a 10,000 to a director apart from the salary income, it will be considered as a, for that we have to deduct the taxes at the higher rate. So this is what with respect to TDS on payment to contract, fees for professional and technical services. And the next one is TDS on dividend, that is 393 of 7. That has been defined under the section of 393 of 7. So for any dividend payment which has been declared by the company, and if the payer is a domestic company, then they have to deduct 10% of tax rates, and the threshold limit is nil. So there is no threshold limit for the dividend on a preference shares has been declared. So this is what the major changes with respect to the sections which we are dealing it in day-to-day activities. And for each and every section, whatever I am providing here, it's a highlights. For this condition, it should be there. And there are certain exceptional also is there. For certain payments, we should not deduct TDS. And for certain payments, there is specific exemptions have been provided. So those things, what we are going to do after this webinar is, we are going to send you on a newsletter with the detailing thing, what would be applicable, what would not be applicable, and we will give the informations on a monthly twice, on a monthly one basis, so that you can able to know what is go in depth of that. And next one with respect to the TCS provisions, here also there is no much change while compared to the Income Tax Act and the new act, but only the sections and the schedule table has been reframed, and the percentage also has been the same. So earlier, for if there are any sale of alcoholic liquor for human consumption, the seller has to collect 1% of taxes, and sale of tender leaves they have to collect 5% of taxes. And if there is a scrap material selling, 1% of taxes will be deducted collected. And when there is a sale of motor vehicle and exceeding a 10 lakhs, we will collect the 1% of TCS, right? For example, if we are buying a car and if its market value is 15 lakhs, means then we have to pay 1% of additional taxes. So those will be continued. And here, currently it has been mentioned as a motor vehicle and goods. And if there is any change modified by the CBDT, then that those kind of vehicles also will be added. And next one with respect to the LRS scheme. So if there is a LRS scheme which will speak about the remittance of transferring in money from India to another country, converting into the dollars, and we will do that exchange, right? So under this scheme, if we are transferring any money and if it is if it is exceeding 10 lakhs means, then we have to pay 5% of taxes if the transfer is made for education or medical treatment. For other payments, we have TCS will be collected at the rate of 20%. So under this scheme, if we are transferring money from one country to another, from India to any other country, and if it has been used for only medical and educational treatment, 5% of TCS will be collected, and for other kind of payment, 20% of TCS will be collected. And the next one would be overseas tour programming package. If we are going for an overseas tour programming package and if we are taking out anything, right? The expense which we are making for travel, hotel stay, for everything, for all the expenditures, whatever that we are making, right? And we are making under the covers under the package. For that, we have to pay a TCS, that is 5% up to 10 lakhs. If the expense is more than 10 lakhs, then we have to pay 20% of 20% of TCS will be collected on this. So this is the major changes with respect to the Income Tax Act 1961 versus 2025. And here I have given major highlights about the sections that we will use repetitively. With these sections that we have identified based upon the transactions and the reporting structure that we get it from HR client. Based on that, we have been prepared this, and we will provide updates also next day. This is all. Until this, we have spoke about the Income Tax Act and other things, and now I just want to give a highlight, and I want to tell you the importance of labor code implementation, because this new labor reforms has been effective from 21st November 2025. It has been already effective. Under this new labor code, these are the major things that we have to implement it. The first thing is a restructure of wages as per the new wage definitions. In the new labor code, the wage definitions has been changed. Based upon this new wage, the social security benefits would be recalculated, and there are many conditions, there are many changes would be there for each and every act. Here it will affect minimum wages act, we have to ensure it, and there is a floor wages. So we have to, as an organization, as an organization, we have to look into it, how the current wage structure will get into align with the new wage definition as per the new code. So these kind of understanding has to be undertaken. And the next one is employee documentation. So for certain type of employees, there might not be have a documentation, but now it has been become a mandator that we have to provide certain documentations like offer letter, experience letter for all categories, and there are certain regulations also has been defined under the employee documentations. That also we have to relook into our HR practices, and it has to be implemented. And the next one would be a timely wage payment. There is a wage payment timelines has been changed, and it also been redefined in each and every aspect. Please ensure that you has been aligned with that. And next one, and the final one would be adjust of working hours and overtime rules. So earlier, there might be there is a restriction in the working hours has been implemented in the new wage code. As many people are aware, it is 48 hours per week. So there is a cap has been defined, and the overtime rules also has been redefined, and it has been the calculation methodology and considerations also have been redefined under the new act. And the next one, so what you have to do is we have to relook into it, and if there are any changes with respect to the policies, that has to be undertaken. And the next one, the expand social security coverage. So social security has been covered for certain more employees. If you have a gig workers or platform workers, the social security benefits have been provided for those people also. And as per the new wage definitions, the contributions and the calculation methodology with respect to PF, ESIC, gratuity, leave encashment, and overtime, maternity benefits. So everything had an impact over there. So the social security coverage has to be realigned with the new wage code. And in the new wage code, they are also speaking more about the workplace safety and welfare. It has been proposed in the act that these are the parameters. There are certain regulations. I think I'm not sure about the count, but it is more than a 20 kind of things to ensure the workplace safety and the welfare of each and every individual, every employees and the workers or contract employees, whoever it is, they are working in the premises, in the office premises. And for the work from home employees also, there are certain workplace safety has to be defined. And in the new labor code, they are also mentioned about the digital compliance systems. So certain registers that we have to make it online, and we have to do online reportings, and everything would be there. So these are the major changes, with major area which had an impact based on the new wage code. And it is very important, and the act also been effective from November. Still, the state have not implemented any acts and other things. But as per the every, we are getting a news from others, right? So it will be get effective from 1st April, and all the rules will be released before that. How it has to be worked, and state also will pass on the act. So based on that, we have to make these necessary changes within each and every one of your organizations. Please ensure that it has been done. This is just we want to re-ensure, we want to highlight to our clients that they have been aligned with the new wage code. And these are all in the existing also under the Labor Act, everything has been mentioned. But in the new labor code, the penalties and the fines are much higher while compared to the existing act. So please ensure that you have been complied with the new codes, and be a safer, ensured as 100% compliant client. And next one would be next. I just want to give a highlight about our service. Most of the people would know about it. If there are any new persons, please. I'm just reiterating. We will undertake payroll processing and payroll compliance and tax compliance, local labor compliance, and we will provide HRMS tool support, which is great HR. Our technological partner is a great HR, and we had a compliance tool. It's a in-house tool. So for if you want to have that kind of tool, we can also do it. And HR consultations and audits also will be undertaken from our side. This is our core services, and our add-ons are specific to this would be POSH compliances we will undertake, and Apprenticeship Act, the operation, what are the reportings, everything that we will ensure of it. Shops and establishment, CLRA compliances, code on wages consultations. This is with aligned with the new wage code. So we will provide a services with respect to the new wage code. We will undertake an audit, and we will provide a gap assessment, and also we will provide recommendations to address those gaps. And next one would be a salary restructuring. And also we are providing HR consultancy, consultations and advisory. And next one would be DPDP Act advisory. So this data protections have been mentioned many where. So this advisory also we are providing to all our clients. And next would be a Q&A. If you have any questions, please let me know um, so that I'm happy to answer your questions. And also I have run a feedback poll. Please provide your response. If you have any questions, please put it in the chat box, or else if you want to unmute and ask also, you can ask any specific questions. With respect to this new income tax act, right? So we will provide, as I mentioned earlier, we will provide a regular updates, and in the upcoming monthly sessions also, we will add up the things, and we will provide more highlights on that, because there are many, yeah. Things. There are many changes which is going to be happen from the 1st April 2026. Until now, the reporting structure, for example, the QTS reporting, how it has to be done, the reporting changes have not been implemented, and there is no information is about it. So once we receive those kind of reporting structures, we will get back. We will tell it to you what kind of changes would be there and how it has been getting impacted on that.
Yeah, Padma, this is Chandrika Prasad here.
Yeah, Chandra.
Regarding this, there is one slide on TDS provisions.
Yes.
In this, you have mentioned that TDS on other payments.
Yes.
Section 190, earlier it was covered under Section 193 to 194T. Now it is coming
Yes.
under Section 393. So
Yeah.
even in our case, for example, this foreign payments, what we are making now, that also comes under Section 393 only.
Yeah, Section 393 only it will comes. So whatever the TDS payments, apart from the salary income, right, that will comes under the Section 393.
Okay. And one more thing,
Yeah.
in the next slide, I could not follow this. In the next slide, you are telling the TDS on commission or brokerage,
Yes.
393 subsection 1. In that, there is a bifurcation of payer into specified person, any person. I just
Yes.
wanted to have some clarity about this. What is this specified person and any person? That I
Okay.
missed actually.
Okay, here the specified person means specified person will not include individual and HUF. Okay,
Mm.
so the other type of categories would be there, no, company, firm. So those will be considered as a specified persons. And there is one addition is if an individual, if I'm undertaking individual or a HUF category people, if they are undertaking any business means, and in the last year, if they had a turnover of more than 1 crore,
Mm.
they will also consider under this act. They also have to deduct. Okay.
Okay.
And if I'm doing a freelancing or professional service, and if my turnover is more than 50 lakhs in the previous year, then I also have to deduct it. So these two individual, even they are an individual and HUF, and they are running a business, and their turnover is more than 1 lakh, they also have to deduct taxes. So that has been defined. But in the earlier act, no, that is not mentioned very explicitly. But in
Mm.
the new act, it has been mentioned explicitly. Each and every word has been defined like that, actually.
Okay. Understood. Okay. Thank you.
Thank you, Chandrika Prasad. If anyone have any questions or anything to be added, because this is very specific to our clients, even if it is not with respect to today's topic, if you have any other questions that you want to ask, please let us know so that I can able to help you on that. Uh, Hi, can you able to hear me? I
Yes,
think we
Padma,
had
we are able to hear you.
yeah, there was a network unstable issue. Sorry for that.
So, Padma, can you also elaborate how it will impact in the reporting format, the TDS filings on a quarterly basis, or while making the payment of TDS on a monthly basis?
Okay.
So, do we have any impact, or it is the same as what we do right now?
Ma'am, right now there has not been any mention about it. But as per the overview, currently with respect to the payment, we will select each and every section, right? 192 like that. So that may be redefined to the 392 and 393 like that because right now itself only the challan details have been verified. So we are expecting those kind of announcements in the upcoming months. Maybe I think in the April first week or second CPDT actually. And with respect to the TDS reporting, in the based upon the pattern that we have received in the last financial year, before the quarter starts, there will be update if there is any change which is going to be happen in the next quarter. So we might expect the FU, the RPU versions and FU versions will get changed in the month of April or May, with aligned with the new Income Tax Act code. So once we get in a notification or a clarity from the department only, we can able to comment on it. What is the exact change which is going to be happen?
Okay, so we have Form 16 and Form 16A, right? So, is there any change in that name also instead of Form
Ma'am,
16?
that name
Any
has
other name that they have allocated?
mentioned. Yeah, it has not been. The name has not been mentioned anywhere, ma'am. So there might be a change
Okay,
that we have to go in depth in the upcoming months, which has to be received because now the names are very familiar with everyone, right? So I'm not sure whether they will
yeah.
change the name, but then there will be more clarity has to be provided in the upcoming months while they are giving the reporting format, right? That time we can able to see it, ma'am. And then from the traces side also, they will make the changes and they also have to provide enough clarity over there.
Fine. Thank you.
Yeah,
Thank you, ma'am.
Padma, Chandrika Prasad again. Can you also share this presentation after this call?
Yeah, Chandrika Prasad, we will share the presentation with you so that you will have a look over that.
Yeah.
We will share it with you.
Thank you.
Is there any other doubts or questions that anyone has? It may be either with TDS or TCS or with the new way, or with the new regulations or something like that.
No, Padmajyoti, nothing from our side. It was a good session.
Thank you, Sandeep. Thank you. Okay, thank you everyone for your valuable time. I had a question. I received a question from Vijendra sir actually. Hi sir, how are you? I think you have joined in mid of the way. I think I haven't provided TCS on educational loan for studying abroad. So for educational loan, the TCS will not be collected from the bank end while we are transferring this amount from India to the other country, right, through LRS scheme. So that authorized dealer will deduct a 5 percentage of taxes. So they will collect TCS, sir.
Okay. Thanks, Padma, for that update.
Thank you, sir.
Thank you.
Thank you, everyone. Thank you for your valuable time. I hope I have given some highlights with respect to the new act, and we will also provide you an updates in the upcoming months, so that we will more aware before the year starts about the new act. Thank you, everyone. Thank you. Thank you for your time.
Thank you. Thanks.
Yeah.